What's up, everyone? It's Caddy with Money Vesting. So in this video, we are going to be talking about everything that is coming up for next week. So we've got a lot of earnings scheduled to be released next week. Just a reminder that Monday is going to be off because it is President's Day, so the markets are going to be closed. So it is going to be a shorter week and a longer weekend, but I still wanted to go over everything that is coming out from earnings standpoint and, of course, from an economic standpoint as well. So we'll break down the GDP numbers that are expected to come out for the fourth quarter of fiscal year 2022, and of course, not to mention the consumer sentiment, and there's going to be the personal income and outlays, and I think the PCE numbers are also coming out, which is going to be very important for the Federal Reserve. So in other words, it is indirectly an inflation week as well. So hope you guys enjoy this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below if you're interested in joining us. There is a 16% discount, and you'll have access to all the private videos, tutorials, and all the benefits, including all the alerts channels, swing trading ideas, options alerts, and a private community of over 3,600 members talking about fundamental and technical analysis as well as macroeconomics as well. So this right here is going to be the earnings calendar. Again, we don't have a lot for Monday, but Tuesday before the markets open, we've got Walmart. I've already done a video on Walmart earlier today. We've got Home Depot reporting. I'm going to be doing a video on Home Depot very soon. Then on Tuesday after the bell, we've got Coinbase, we got Palo Alto Network. Both of these companies are on my radar, so we'll be doing analysis on those. Public Storage is also reporting after the bell on Tuesday. I've already done a video on Public Storage in the past, but I will be doing an updated analysis on them very soon. And Realty Income Corp, my dividend stock, is reporting on Tuesday after the close. Then Wednesday, we've got Baidu. After the bell, we've also got NVIDIA. I've done a video on NVIDIA earlier today. We've got Lucid reporting, Unity, and Etsy. So Unity and Etsy, I will be doing a video on them later today. We got Teladoc and Overstock also reporting on Wednesday before and after the bell. And then on Thursday, we've got Alibaba, we got Moderna, we've got Domino's and Wayfair. And then after the bell, we've got Block, in other words, Square, Carvana, Mercado Libre, we got Bookend Holdings, Warner Brother Discovery, Wish.com, we got Beyond Meat, and Intuit. Intuit is one of my favorite companies. It's a very, very prominent software stock. And we'll be looking into what they have to report in terms of those earnings as well. And we've also got Nikola reporting on Thursday before the bell. So lots of interesting companies, couple companies I own, and couple companies I'm actually planning to buy. Couple companies I'm just going to be really interested to learn more about. So I actually forgot to highlight Fiverr. They're also going to be very important. So Fiverr and TJX, they're also reporting. So it's going to be very much a retail week because we have Walmart, we got Home Depot, we got TJX, Alibaba, of course. We got a little bit of insight from fintech. So Block is reporting. We got Wayfair and Domino's. So it's going to be more of a retail week for earnings. Now, this right here is going to be the economics calendar. So we do have the GDP numbers coming out at 8:30 a.m. on Thursday, February 23rd. And this is going to be for the fourth quarter calendar year 2022. And we've also got the jobless claims numbers that pretty much come out every Thursday. Raphael Bostic is speaking on the very same day. And then we've also got the personal income and outlays. We got new home sales and consumer sentiment along with Loretta Mester talking once again on Friday as well. So this right here, the GDP consensus and the quarter over quarter consensus on an annualized basis is going to be 2.9%. So that's the rate that we are anticipating for the gross domestic product. And the prior number, of course, 2.9%. So I think this is the fourth and final revision for the GDP numbers. And this right here is going to be inflation. So we've got personal income and we've got personal expense and consumption expenditures. We got core PCE and PCE price index. So unfortunately, as brutal as the CPI and the PPI numbers were last week, the consensus for the personal consumption expenditure, or in other words, the PCE, is also not super great. So month over month, the consensus right now is about a 1% increase in personal income. And then personal consumption expenditure, PCE, expected to go up 1.2%, which is actually going to be pretty substantial versus the negative 0.2% same time last month. So last month, we pretty much saw deflation for both CPI, PPI, and of course, the PCE as well. But unfortunately for this month, the consensus is pretty high at 1.2%. Month over month for PCE, it's at 0.4%. And year over year, we're sitting at 4.9%. That's for the price index. And then core PCE month over month expected to jump by 0.4%. and year over year to come down to 4.3%. And then finally, consumer sentiment is also coming out. Consumer sentiment has actually gotten better. We were trading at under 50 for the longest time, but as oil prices have come down, as inflation has rolled over, we have seen consumer sentiment in general kind of get better, and there's been an uplift in consumer sentiment. Right now, the consensus is 66.4 versus the prior 66.4. Also, is exactly where we're sitting at right now. Now, talking a little bit about the market in terms of the NASDAQ first, there's been a lot of consolidation sideways, right? So what we have really seen from the NASDAQ is a very strong rally since December. So pretty much from back in 10,180 levels, from back on December 27th, the NASDAQ rallied a little bit over 19%. Year to date, it's up double digits. It's in the mid-teens, high teens. And the last couple of weeks, we've seen a lot of consolidation sideways, right? We've pretty much just traded back and forth. We're just kind of like sideways here, lots of consolidation. There's a battle between the bulls and the bears, and resistance is really going to be sitting put over here. That's going to be at 12,280. So you can see that level right here. And we've got a support sitting for us at around over here. That's a support at roughly around 11,500. So this right here is going to be that support, 11,475, 11,500. And of course, we've got a resistance sitting at 12,280 for the NASDAQ. And overall, we're just kind of like in the middle, consolidating sideways. Now, this at the moment can also be seen as a little bit of a bull flag. So if I pretty much highlight this right here, you can see that prior to this bull flag forming, we've seen a very strong rally. So this right here has been a very nice, consistent 19% gain from December lows. And then we started trading sideways. Now, from a technical standpoint, this is a very good setup for a potential breakout even further. So, if you get some good PCE numbers, if you get some weak GDP numbers, that could once again increase the probability for the Federal Reserve to be a little bit more, dovish. In other words, just, not really go with the 50, maybe 25 basis points in March. And once again, increase that positivity or that celebration mode in the market, and could lead us to a potential breakout within the NASDAQ for us to get up to 13,200. But, if the reality sets in, which the reality of the problem, reality of the situation really is that, inflation looks really a little bit more about stagflation as opposed to continued disinflation or deflation in the economy, then it's possible that we get rejected at 12,280 over here. Valuations come into play. Technicals come into play, which is to say that the RSI and the MACDs are really overextended, overbought. The risk rewards are not super great. And there is a possibility that we start to kind of break below this support and once again start trending lower. And then it's going to be a real battle between the bulls and the bears for us to see whether, the support really holds up at 10,000 or if we break down even further. So that's the overall analysis. We're kind of like in the middle. We got a resistance up top. We got a support at the bottom. Either way, we break out. I think the next targets are going to be achieved. So if you break out above 12,280, next target is going to be at 13.2. But in case we get a breakdown below 11.4, next target, unfortunately, could be sub 11,000 for the NASDAQ. So that's what I'm really paying attention to. And for the S&P 500, of course, we got lots of buyers once again stepping in at around 4,040, but we got a big support sitting for us at 4,000. So that right there is going to be that level to watch. And right now we are seeing a very nice, consistent higher highs and higher lows from the S&P 500. So if that pattern continues, it is a possibility that we kind of retest back up to 4330 if the numbers come in very strong and the earnings are somewhat restoring that confidence within the market. It's a possibility. 4330 is a target, but anything that's not going to be super great, if reality sets in, if the macro picture continues to hurt the overall market sentiment, then it's possible that we get a bit of a breakdown below 4,000, which is what I'm really cautious about. And I've been kind of warning everybody that be careful. Risk management needs to be proper. Have your hedges in play. If you can take profits for your trades, I personally would, considering how overextended the markets really have been. And from a fundamental standpoint, the valuations have just gone a little too stretched, right? 17, 18 times earnings is no joke, considering inflation is still way above 6% at the moment. So hope you guys enjoyed this video. Keep a close eye on the dollar index. Keep a close eye on the 10-year yields, and keep a close eye on the volatility. The 10-year yields here, very surprising, very interestingly, getting rejected at 3.9%, so almost exactly where we got rejected back in December. So this right here is that resistance we talked about, and right now we're getting a little bit of a rejection from that level. So it's going to be interesting if the 10-year yields start rolling over. That could put additional upside pressure on the markets. And the dollar index here also starting to see a little bit of a pullback here. So on Friday, they were down. And then not to mention the volatility, which was higher. However, a red candle on Friday, so back to trading at low 20s. So hope you guys enjoy this video. Big week coming up for GDP, personal consumption expenditure, which is the Fed's preferred measure of inflation, and consumer sentiment, and then not to mention a lot of earnings on deck. Let me know your thoughts down in the comment section below. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, hit that notification bell, and if you want to get access to all the alerts, trading alerts, spines alerts, investing alerts, options alerts, swing trading ideas, and all of our private videos and channels, links are going to be down below. As always, happy investing, and I'll see you all in the next video.